Welcome to the deep dive. Today we're really digging into a project it's building more than just a bridge, maybe like a superhighway, between traditional finance and the DeFi world. It's called Ondo Finance, and it's all about bringing real-world assets onto the blockchain.
That's right. We've looked at quite a few reports, some deep analyses on Ondo Finance, and our goal today really is to boil it all down. What makes this project tick? Why is it getting so much buzz? And maybe most importantly, what could it actually mean for, your investments? You've probably heard the term tokenized real-world assets floating around. Ondo is definitely one of the names leading that charge.
Okay, let's jump right in then. Lots of projects talk about bridging TradFi and crypto. From what we've seen, what's the specific, the really pressing problem Ondo Finance is trying to fix? What makes them different?
Yeah, that's a great starting point because it absolutely is a huge problem and it hits both sides. You've got traditional finance first, global markets, massive, right?
Hmm.
Over $867 trillion, but notoriously slow, super inefficient, often quite exclusive too. Transactions can take days, multiple middlemen, high costs, and honestly, access is limited for a lot of people around the world.
Right, the old system. Plunky.
Exactly. Then flip the coin. You've got DeFi, decentralized finance, huge advantages there. Settlements are almost instant. It's open 24/7. Everything's transparent on the blockchain. But historically, DeFi hasn't had great access to stable, low-risk assets, the kind that generate predictable income from the real world. Most of the yield in DeFi traditionally came from crypto assets, which can be pretty volatile. Not everyone's cup of tea.
So it's this kind of two-sided gap.
Yeah.
TradFi is trustworthy but slow and walled off.
Mhm.
DeFi is fast and open, but often lacks that stable foundation investors want.
Precisely, and that's the gap Ondo was basically founded to bridge, to bring the stability of one world into the efficiency of the other.
Okay, building that bridge makes sense. But what's the big picture idea? Can you maybe give us a simple analogy, something really clear for everyone listening?
Yeah, absolutely. Think of it like owning a really nice classic gold coin, a physical one. Now, in the old system, if you wanted to sell it or maybe lend it out, use it as collateral. You'd have to go to a special dealer, get it appraised, worry about physically securing it, wait for the money transfer. It works, it's secure, but it's slow, very physical.
Right, involves a lot of steps, physically moving things.
Exactly. Now imagine you could take that same gold coin, put it in a super secure regulated vault somewhere, safe and sound, and in exchange you get a digital receipt, a token, perfectly verifiable, proving you own that coin in the vault. This digital token, you can trade it instantly, globally, 24/7, use it as collateral online, all while the actual gold stays locked up tight.
Ah, okay, so the token is like a digital claim check for the real thing.
That's a great way to put it, a digital claim check. And that's essentially what Ondo Finance does, but instead of gold coins, they use things like US Treasury bonds. They take these stable, income-generating, real-world assets and turn them into digital tokens on a blockchain. The main goal: make these institutional-grade financial products accessible to more people, make them efficient, transparent, all the time.
Okay, so taking trusted physical investments and giving them a kind of high-tech digital upgrade so they move faster, reach more people. I like that. Digital avatar is sticking with me.
Yeah, it's about making them move at the speed of the internet, really, while keeping the underlying trust.
Okay, that clarifies the what and why. But the how is always tricky. How does this actually work? What are the key pieces Ondo uses to make this happen?
Right, the mechanics. So Ondo's core strategy is tokenizing these RWAs, real-world assets. And they started smart, focusing on really stable stuff like US Treasuries. They have two main products right now. First is OUSG. That stands for Ondo Short-Term U.S. Government Bond Fund. It's a tokenized fund backed by short-term T-bills, mostly aimed at qualified investors.
Okay, so more for institutions or accredited folks.
Generally, yes. And there's USDY, that's the US dollar yield token. It's a yield-bearing tokenized note, also secured by treasuries. And this one is specifically designed for non-US retail and institutional investors. That's a key difference, opening up US dollar yield globally.
Ah, so USDY is the one for a broader international audience.
Exactly. Now, here's where it gets really important for trust and security. Ondo doesn't just hold these bonds themselves. They partner with top-tier, highly regulated custodians. Think BlackRock, Fidelity, Coinbase, Komainu. These guys physically hold the underlying assets.
The big trusted names in finance and crypto custody.
Right. And crucially, these assets are held in what are called bankruptcy remote legal entities. Basically, it means the assets backing your tokens are legally separate from Ondo's own company operations. So If Ondo ever had financial trouble, those assets should still be protected for the token holders.
That sounds like a critical detail for investor protection, separating the assets.
It absolutely is. And another really strategic piece was their acquisition of Oasis Pro, announced back in July 2025. Oasis Pro holds some vital licenses in the US. They're an SEC-registered broker-dealer. They operate an alternative trading system, an ATS.
Which is like a private stock exchange, kind of.
Sort of, yeah, a regulated venue for trading securities. And they're also a transfer agent managing ownership records. Getting those licenses through Oasis Pro gives Ondo the legal rails to actually offer these tokenized securities compliantly within the U.S. market. That's huge for attracting institutions.
Wow, okay, so they're not just building tech, they're actively acquiring the regulatory infrastructure. That's serious. And they're also building their own blockchain, you mentioned, on top of everything else.
They are. It's quite ambitious. While their current tokens, like OUSG and USDY, are on established chains like Ethereum, Solana, Polygon, to be where the users are, they're developing their own Layer 1 blockchain called Ondo Chain. It's specifically designed for RWAs. It uses proof of stake, POS, for consensus. But with a really interesting twist. Validators on Ondo Chain can actually stake tokenized RWAs like OUSG, perhaps, to help secure the network. That directly integrates real-world value into the chain's security and could reduce volatility associated with staking purely crypto assets.
Staking real-world assets, that is different.
It is, and it will also have something called enshrined oracles. Think of these as built-in, highly reliable data feeds. The network validators themselves collectively agree on critical data like asset prices or proof that the reserves are actually there. Boosts transparency and reliability right into the base layer.
Okay, and you mentioned it's public permissioned. What does that mean exactly? It sounds a bit contradictory.
Yeah, it does sound a bit like an oxymoron. It means the blockchain itself is public. Anyone can use it, build on it, see the transactions. That's the public part. But the entities that actually validate transactions and secure the network, the validators, are vetted or permissioned. They need to meet certain criteria.
Ah, so not just anyone can run a validator node.
Exactly. It's a deliberate choice. They argue it's necessary to meet the compliance and security standards that big institutions require before they'll participate. It's a trade-off for sure. More centralized than, say, Bitcoin or Ethereum's mainnet, but potentially more palatable for regulated finance.
Makes sense. A pragmatic compromise to bridge those worlds.
Yeah.
Okay, that's a really thorough look under the hood. Let's bring it back to the user, maybe someone listening who isn't a big institution. What are the real practical benefits for, say, a regular person, especially one outside the U.S.? Why should they care about OUSG or USDY?
Great question. For that non-U.S. individual, or even smaller institutions globally, the benefits are pretty compelling. First, global access to stable yield. You can get exposure to the yield from US Treasury bonds, generally seen as super safe from almost anywhere, anytime. 24/7, you don't need a U.S. brokerage account. You bypass all that traditional friction and geographical restriction.
So breaking down borders for safe yield.
Exactly. Second, efficiency and speed. Transactions are way faster than old-school finance. Settlements happen in minutes, not days, and often cheaper, too.
Near instant transfers. Big difference.
Huge. Third, transparency. Because it's on a blockchain, you can often verify the underlying reserves more easily and frequently than with some traditional products. That on-chain proof brings more trust.
You can actually see the backing, potentially.
Yeah. Potentially, yes, through those enshrined oracles and reporting. And fourth, integration with DeFi. This is key. These tokens aren't just static investments. They can plug into the DeFi ecosystem. For example, Flux Finance, a lending protocol Ondo helped build, lets you use OUSG as high-quality collateral to borrow stablecoins. And USDY is popping up in places like the Drift protocol on Solana as yield-bearing collateral, meaning your collateral is actually earning yield while you're using it for something else.
Wow. Okay, so your safe asset is still working for you, even when it's locked up as collateral. That's pretty cool.
It unlocks capital efficiency in new ways. So yeah, it's about making these top-tier assets more available, faster, more transparent, and usable within the new digital economy.
That really does sound like a significant shift in accessibility, making Wall Street products work on internet time for potentially everyone.
That's the vision, absolutely. Leveling the playing field and making capital more dynamic.
Okay, the picture's rosy, the tech sounds impressive, but we always need to look at the other side. What are the risks? The criticisms? What should someone thinking about Ondo or holding the Ondo token be really aware of? What keeps the Ondo team up at night, maybe?
Right, the critical perspective. And yes, our sources definitely point out several significant risks. It's not all smooth sailing. First big one, Interest rate dependency. This is fundamental. The appeal of OUSG and USDY hinges heavily on U.S. interest rates. If the Federal Reserve cuts rates significantly, the yield drops. Suddenly, those tokens might look less attractive compared to riskier but potentially higher yielding options elsewhere in DeFi.
So their core product's appeal could just shrink if the macro environment changes.
Exactly. It ties their success directly to Fed policy in a way. Second, competition. This space, RWA tokenization, is heating up fast. Ondo has rivals from the crypto side like Centrifuge or Maple Finance, but maybe more importantly, they're up against giants from traditional finance now entering the space. Think BlackRock with its own tokenized fund, BUIDL, Franklin Templeton too. These guys have enormous resources, brand recognition, existing client relationships.
Yeah, competing with BlackRock is daunting.
It's a major challenge. Third, and this is crucial for token holders, limited Ondo DAO token utility. The native Ondo DAO token is primarily for governance right now, especially for the Flux Finance protocol. But here's the gap the sources highlight. The token doesn't directly capture value from Ondo's main business. The fees are spread earned on OUSG and USDY. There are no dividends paid to token holders, no token burns funded by revenue.
So the project could be making money, but that value doesn't automatically flow back to the token itself.
Correct. It means the token's value might rely more heavily on speculation or future promised utility rather than current earnings. That's a potential disconnect.
That's a really important point for potential investors in the token.
Definitely. Fourth, related to the token, is the high fully diluted valuation, FDV, and inflation. A lot of Ondo tokens are still locked up. They'll be released gradually over the next few years based on a vesting schedule. This means a constant stream of new tokens hitting the market.
So ongoing sell pressure.
It creates potential downward pressure, yes. Demand needs to keep growing significantly just to absorb that new supply and maintain the price, let alone increase it. We see big unlocks scheduled, for example, every January for the next few years.
Okay, something to watch on the calendar. What else?
Regulatory uncertainty. Even though Ondo is being very proactive about compliance, especially with the Oasis Pro acquisition, the rules for digital assets, tokenized securities, are still being written, particularly in the U.S. An unexpected negative ruling from the SEC or new restrictive laws could really throw a wrench in their plans. It's an evolving landscape.
The regulatory ghost is always there in crypto.
Always. And finally, that centralization trade-off we discussed with the public permission chain. While it's designed for institutional comfort, it is inherently less decentralized than other public chains. It's a deliberate choice, but it's still a trade-off against the pure decentralization ethos some value highly.
Right. Meeting TradFi's needs means maybe not being purely crypto-native in structure.
It's that balancing act. Innovation versus compliance, decentralization versus institutional adoption.
So definitely a complex picture, groundbreaking potential, but facing real market, economic, tokenomic, and regulatory headwinds.
That sums it up well. High potential, significant challenges.
Okay, so if you had to boil Ondo Finance down to just one or two sentences for someone tuning in now, what's the absolute core takeaway?
I'd say Ondo Finance is really a leader in building what you might call Wall Street 2.0. They're tokenizing high-quality, real-world assets like US Treasuries onto blockchains, but with a super strong focus on playing by the rules, regulatory compliance, and getting institutions on board. The goal is making traditionally exclusive finance efficient, globally accessible, transparent, really bridging that gap between old and new finance.
Wall Street 2.0. I like that. Concise. You know, this deep dive has covered a lot of ground, breaking down Ondo's complexities.
Yeah.
This is probably a great point to quickly pause and remind you listening of something.
That's right. If you're enjoying how we break down these complex projects into hopefully simple pieces and you want more reviews just like this one, make sure you subscribe to our channel, CryptoBox. We put in the hours doing the research, reading the reports. You don't have to.
Absolutely. Okay, what an incredibly insightful session on Ondo Finance. It's really clear they're a major player trying to reshape finance.
Indeed. The sheer ambition is impressive, right? Taking the most trusted, maybe even conservative traditional assets and merging them with the speed and transparency of blockchain. It really makes you think, if US Treasuries are moving onto the blockchain, what does that signal for the future of all assets? Real estate, stocks, art, everything. How fundamental might this shift be to how we all invest?
That's a really powerful thought to end on. Could your future investments live primarily on a blockchain? And will companies like Ondo Finance be the crucial bridges that make that happen? What new possibilities or maybe new risks does that future hold for you? Thank you so much for joining us on the deep dive today. We hope this gave you a much clearer, more informed view of Ondo Finance and this whole exciting, complex world of tokenized real-world assets. Until next time, keep exploring.